Welcome to Jill on Money, powered by The Compound. I am your co-host, Jill Schlesinger, certified financial planner, all-around nice gal. I'm joined by my executive producer, Mark Talercio, who laughed at me saying all-around nice gal.
Are you showering yourself with compliments?
I think I'm generally a nice gal-ish.
I agree.
I mean, not to you always, but anyway, today we are talking about some year-end tax loss harvesting and rebalancing. Now, Mark, not a lot of losses this year. Stocks are on a tear. Bonds are sort of flattish. What's down?
Yeah, I don't know. If you have some losses, I really want to see what you have.
Or maybe you bought something at the wrong time.
Perhaps.
Right? Or maybe you have an old carry forward loss.
Could be.
So here's how we think about year-end planning when it comes to taxes. You look at your taxable portfolio, okay? And you say, what do I want to do with this portfolio? Are there any losses? And if you've harvested losses in the past, rebalancing your portfolio right now might be really kind of great. So let's pretend it's 2022. Stocks get shellacked, bonds get shellacked, and you sell some stuff and you had more losses than gains, right? And as a result, you had $3,000 a year that you were able to deduct from your income tax return. And the rest that is that unused portion of that loss gets carried forward. Well, you can use those losses maybe in a year like this year, where you're saying, wait a second, my stock position has gotten way out of whack, but I'm scared to sell because I don't want to pay capital gains. So you use those losses to actually rebalance. And rebalancing is something that I think people don't really understand. So, Mark, do you want to try to tackle rebalancing 101?
I mean, it's a pretty simple concept to me. You have your desired allocation, right? Let's just say it's 80-20. You want to be 80% in stocks and 20% in bonds. Those things get out of whack over the course of a year. If something's really going up or something's going down, you could end up at the end of the year, maybe you have 85-15 or
maybe let's say it's 90-10. Like
90-10.
I'm 90-10. I'm 90% stocks, 10% bonds. Now, most people will say, I don't want to sell 10% of my stock portfolio because number one, we're all greedy.
Yep.
And number two, they don't want to pay taxes. But we should remind people that capital gains rate, the top capital gain long-term capital gain rate is 23.8%, which is relatively low over the course of history. Okay. So it is not a terrible number. Now, if you have some losses from previous years, yes, you can, it'll make it a little bit better. But even if you don't, I think once a year, best practice is to rebalance that portfolio. Why? Because rebalancing forces you to sell high and buy low. Nobody wants to buy something on the way down. But if bond prices are down or flat-ish and stocks have zoomed up, taking the money out of the stock position, adding it to the bond position at a time where things are good, that makes a ton of sense. Now, rebalancing can cause tax issues. That's why we say in a taxable account.
Taxable account once a year.
Once a year, that's it.
Yeah. If we're talking about a tax deferred account, like your 401k at work or your IRA.
Or your Roth IRA.
You should still be rebalancing, but you're not going to incur any tax hit.
How often do you think we should rebalance in a retirement account?
I still think once a year. Some people say twice a year. That's fine. If you want to do twice a year, but figure out what works for you and stick to it.
And the good news is in a lot of employer-based plans, a 401k, a 403b, a thrift savings plan, a 457 plan, there's a little box you can check that says, should we rebalance for you? Automatic rebalancing in those employer-sponsored plans are great. Now, at my friends at CBS, I just have them do it quarterly because I think that
quarterly. Wow.
Yeah, the reason why is that's when they focus on the statements, and I think that's probably. But it can be once, twice, 4 times. I wouldn't do it monthly, but I would do it quarterly. There is a tiny bit of empirical evidence that does show that the rebalancing a little bit more frequently because things are so much more volatile, but it doesn't really matter. We just want you to be in a place where you are comfortable with the risk and the risk profile. And the problem that you're always going to encounter is that you're going to look back and say, I should not have rebalanced. I should have let it ride.
Of course, hindsight is 20/20.
And so reality, gang, you don't have to be perfect. We want to keep people in line because, Mark, the bottom can fall out at any time. And by the way, I remember when 2022 rolled around, and I remember how everyone was like sucking their thumb and hiding in a corner and so scared. Honestly, there's really only two emotions when it comes to investing. There is fear and there is greed. I get it. Everyone's greedy now because all assets are trading higher. But when that fear-based emotion comes creeping in, that's not actually a great time for you to be reactive. I'm not saying you shouldn't rebalance in a bear market,
Right,
because I
right,
think
right.
you should. But I do think that it's very hard to sell into strength when everybody is yammering about how great everything
And
is.
that's why I think you need to just figure out what works for you, whether you do it at the end of the year or you do it in the middle of the year in June or July. Just pick something and try to stick with it every single year.
And by the way, if you have a huge position in something that's made a lot of money, I would like to really focus on perhaps giving you an opportunity to take some of that gain and not pay tax on it. Do you want to know how?
Donor advised fund?
A donor advised fund, ladies and gentlemen, at every major investment house allows you to put money that has take an asset that is appreciated in value, move it into a charitable fund. You get the full tax write-off of what you put into that fund. You don't have to give all the money away today, but you get the tax write-off in this year. So if you are in a high tax bracket and you want to be charitable, you can take some winners, push it into this fund, give your money away, be charitable, do good, do right by the world. And the money is really well used in that environment. I love DAF. You haven't done a DAF yet.
No, I don't have as much money as you.
Oh, I know. I'm so sorry. You will. You
Oh,
got
really?
that wife. You got
Yes.
that. You got that high earning wife.
That's right. And, maybe all that crypto I'll buy.
Yeah, exactly. Exactly right. So are you ready to rebalance? Are you ready for some tax loss harvesting? If you want to know more about donor advised funds, give us a shout. Go to JillOnMoney.com. Click the Contact Us button and write us a note. And by the way, if you want to write a note here and leave a comment, we'll certainly get it. We'll certainly respond to it. And if you have a topic that you want us to discuss, let us know. We thank you so much for watching, and we'll see you next time.